Hello, everybody. Welcome to Market Moves. My name is Jason. I'm the Wizard of Ops. With me is Jay, aka Dark Matter. Hey, Jay, how you doing?
Good, Wiz. How was your weekend? Did you get to enjoy it, relax a little bit after some nice OpEx fun last week?
Yeah, I mean, it was good. It was good. I'm just happy I didn't screw up the introduction this time in the show. I still have to get the rhythm of doing the show. But yeah, no, it was relaxing. It was a little bit of chores, my life gets not as exciting when you have kids.
Hey, I think it just gets even more exciting, right? You just have
That's
different kinds
true.
of weekends to look forward to. That's it.
That's true. Um,
Well,
all right, so let's get started. What did you see last week?
yeah, I mean, last week, just to give, a quick recap for those, in our Discord and following those. So I'll just quickly jump up here at the top. I
Mhm.
mean, we kind of, called out and said, our bullish bias existed as long as we were above 5,600 SPX. So ultimately, we did get that low, which did trigger our weekly trade plan idea, which was a failed breakdown of kind of that 5,600, 5,615 zone that was showing as negative Vanna there for us, and even some gamma when we did hit that. So we held that level, and then we just went up, right? And we almost got to the top of my target level there. 57.23 was kind of my target for the week.
Wow.
We got, to about 57.35, I think, or ish about there. Yeah, 57.33 was the high last week. So all in all, another successful week from Volland, navigating us through what was a very crazy FOMC kind of week, and we finally got our 50 basis cut rate. So really, really exciting there. Jason, any thoughts from your end?
Yeah, I mean, I'll just talk a little bit. Last week, we had Aisha on, and she was talking about how a 50 basis cut would have been a little bit excessive. The one thing I'll share though is I guess it was Thursday when we had that 100-point rally. Mostly it was pre-market, but I mean, it happened. It was like about a 100-point rally. It got up to like 110, 120 points at one point in time. One thing we noticed in Volland was the dealer spreads narrowed considerably. I mean, we've had some liquidity issues ever since the August, VIX explosion, I guess, going up to like 50 or 60. But we had some liquidity issues since then. Spreads have been wider, but starting on Thursday, they narrowed, and that's a huge contributor to a bullish kind of move. I didn't notice. Like, you kind of think that liquidity would narrow or get better after a 50-point basis cut, like a surprise 50-point basis cut from the FOMC. So I think that the rally was liquidity driven mostly. And liquidity kind of it permeates throughout all the markets. So if you have better liquidity in the bond market, it will permeate to the options market and vice versa. So I mean, that's kind of what I saw during the week. However, aggregate Vanna was tanking. I mean, I guess I don't know if we're going to go over that a little bit, but that is a signal of rougher times in the future. Maybe, not today, but, it could be like a week or 2 weeks in a swing time basis. I kind of see some downside potential, especially with very little support underneath. So I don't know.
I
Is that what
do.
you're looking at, Jay?
I do, yeah. So if we jump into just this week for
Mhm.
a few minutes, and as you know, for everyone who's a Volun sub, you can get access to our weekly plans, and then our daily plans are all provided here in the Volun Edge Extractor channels. I think my call outs there, just to kind of recap some of my notes, like while yes, we got a bump in aggregate Vanna over the last couple of days of the trading week, we are very much below what I would say is our typical norms, especially when we see kind of a bullish, more rally sustained market, right? So
Mhm.
you've got that aspect of it. I think the one positive out of last week, Jason, from a pure Vanna perspective, is we did build a little bit more support, which was extremely tiny on the cumulative exposure, but it's still, it worries me. You lose that 5,500 level, what comes, right? Essentially. So there's a little bit of that. Let's jump into the actual interactive charts here so we can jump up and down.
Mhm.
So want you give some of your takes on just the aggregate Vanna trend here for just a minute, Wiz.
Yeah, I mean, you see a little bump there, but I mean, it would have to sustain in order to start stemming off. It would have to sustain back up to this 30 billion area. And honestly, I don't think that there's even a possibility of that. I mean, if we drop below 5,500, sure, we get a bump in Vanna, but all that 5,700 and 5,800 aggregate Vanna will shrink. So it's almost like a net even at best. I mean, there's very little support underneath. I mean, it's not usually you'd like to see more like a V in order to sustain a slow moving upward trend, but it won't take very much. Yeah, it won't take very much for the market to drop. And you could see that in the Vanna stochastic. It's very negative. So I think that I think it won't take much to tumble markets, and we are in a precarious macro time and geopolitical time. So it's something. If you're bullish, I would definitely remain hedged. If you're bearish, though, I would be nimble or have something with low risk because the timing of this is uncertain. You don't know when something will strike, but
100%.
yeah, but the Vanna dropping is or the aggregate Vanna Valley there is a concern. Even though you get little spikes every now and again, but I don't think it can actually go up from here. Aggregate Vanna, that is.
Well, it's going to
Not
take a big
SPX, but
catalyst, right? As you said, it's going to
yeah.
take a big catalyst to make this move up, to add more Vanna back into the market, right? And I think the other thing was just looking at is look at the gamma, right? I mean,
Mhm.
I would love to get your thoughts here, but we look at this 50, 5750 gamma here,
Mhm.
just doing its thing, right? And
Yeah.
this worries me a little bit here. And then if you notice it going to your point back below spot, I mean, you have no dealer support here. And if we get cooking, we're gonna get cooking down fast and it's gonna be quick. And this is the
Mhm.
first kind of major area here of the dealer support, right?
Yeah. And it'll probably drop a little bit below that to like a 57, 54.75 kind of area. But if you lose that, I mean this long stick right here at 57.50 will shrink because it's getting farther away. Um, and so a lot of these are end of September moves. So I think toward the end of September, it's going to be dicey.
Yeah, no,
I mean, it's
100%.
not saying it'll drop right away, and this is the end of September. It's the last week of September, so I'm not saying it'll drop right away. And upon October 1st, we're not going to drop 300 points, but just the environment is ripe for a large drop. And historically, when you see aggregate Vanna trend down that strongly, as you saw in the before. I mean, you saw aggregate Vanna drop from June to July. Next thing you know, we start dropping. The market starts dropping in July. So it's a leading indicator. It kind of says, and now our aggregate Vanna is at the same level as it was in the trough. So I do think that the environment is ripe for really a large kind of VIX move, like an overvixing move, which is a great segue into what we wanted to talk about today.
Yeah, let's hop over there.
So
So
actually, before
go
we
ahead.
hop over there, yes, Julian, I'm on it. um, before we hop on to there, actually no, let's hop on to there. Let's go to my presentation. Now, this is an old presentation, and it's kind of just showing like one of our earlier studies, like 2021 kind of studies on things we had. Volland wasn't live yet. I think we were just starting to create it. I don't think that Volland wasn't available at the time. So we have more sophisticated tools now, but the study still holds, and Volland supports this study. So first, I'll talk about what overvixing and undervixing means and the reason why I talk about it so much, honestly. So there's a lot of academic papers out there that recognize and try to study something called the spot vol correlation. Spot being the price of the underlying, in this case SPX, and vol, implied volatility, which is being measured by the CBOE-VIX index. So because SPX is the hedging vehicle for SPX options, like, it's ES really, but the underlying is the hedging vehicle. SPX does get partially driven by the options activity. And when I say partially, I mean it's a major part. I mean, it's not, obviously there's people out there and institutions that are just clicking buy because they like fundamentals or technicals or whatever. But option dealers, especially with record option volumes nowadays, option dealers are gaining more and more impact on underlying moves. So this correlation, though, between VIX and SPX, a lot of people recognize it. They see that when VIX goes up, SPX goes down, and vice versa. But they don't know what scope, like how much should VIX be going down when SPX goes up, or vice versa. And this is shown in a correlation. This is, you do a scatter plot of daily VIX change, VIX point change, because VIX is already a percentage, and SPX percentage change. And this is what we see right here. And this is only up to 2021. Like I said, it's an older study, but I think it's from 2017 to 2021 data. Basically, what you're seeing here is that for every 1 point move in SPX, you are going to get, and by 1 point, I mean 1% move of SPX, you're going to get a 0.7 point move in VIX. Okay. So if SPX goes up 1%, you could expect negative 0.7 in VIX. There are, of course, some deviations on Mondays. VIX is always going to be a little bit higher than normal just because the weekend has passed and the short-term implied volatility is going to be higher because the market's open more. And on Friday, VIX will come down for the same reason, but opposite. So there are little, nuances to keep in mind when studying this, but that is what spot vol correlation is. And there's a lot of academic papers, a lot of even, blogs and stuff about it. There's a lot of, some even Twitter vol traders and personalities talk about it quite a bit. Yeah. What we saw in our white paper when we did further studies on it is that spot vol correlation is driven by Vanna hedging, okay? By Vega hedging, really. And this makes sense. This is why skew exists. Vanna is the Greek that is associated with skew. But Vega is the reason why, when prices go down, there's a lot more insurance buying and a lot less liquidity, typically. And that's what causes implied volatility to go up, right? So there is a correlation. There is a causation to this relationship, all right? For the typical just retail trader, just know it exists, know that there's a reason why it exists, and that any deviations from it could be an opportunity, okay? So this was, in our example, I kind of just showed 2021 as a couple of examples of when VIX overshot the market, the SPX. The orange line here on the right, on the left axis, the primary axis, is showing what point of overvixing there is. So my definite overvixing is a word that I invented, quite honestly. It is how much more VIX moved than the spot vol correlation implied. Okay, so here, this is how this trend line is what the spot vol correlation implies. These dots up here in that 5-10% region, that would be an overvixing. Okay, a strong overvixing. All right, am I making sense still, Jay?
You still are. I want you to keep going. We're gonna jump into the Volland graphs here in just a minute as well. But keep going. You're doing a great job of like
Yeah,
explaining this.
I'll keep going to show historically. Yeah, I'll keep going to show historically. So, when you get that overvixing, all right, we noticed, and here's just a couple of times that happened in 2021. You saw an overvix right here in, looks like that's February. Here in early January, a very strong overvixing. When you get that, okay.
Wiz, are you sharing the first slide or the second slide? Just see the first slide.
What do you see this VIX to SPX relationship or?
No, I just yeah, that's the one I said. I just want to make sure I'm on the right one.
Oh, yep, this is the right one. Yeah.
Okay.
So right here, January 26th area, we had a very strong VIX overshoot, a very strong overvixing. Okay. And we noticed that, when we were doing this study, that when you get an overvixing over 2 points, so that means when you have a spot vol correlation, VIX is 2 points higher than that correlation implies. Okay. So that's what overvixing is. In this particular study, 2 points greater is a big deal. All right.
Yep.
When you get over 2 points overvixing, within 2 weeks, you will recover that. Overvixing typically happens on strong downtrends. When you get that strong downtrend, within 2 weeks, you completely recover it. Sometimes there's even follow-up downside. But as seen in August and September now of this year, this study still holds. Like it still works. It's just because we got more granular in Volland doesn't mean that it doesn't work anymore. We zoomed in a little bit. You saw an overvixing here, 10 points of overvixing here in January 2021. And then next thing you know, look at all this. The blue is the percent change in SPX. Just a couple days later, this is 3 days later, we start seeing 1% changes, 2% changes, 1.5% changes. We fully recovered within a week, right? In a 10-point VIX overshoot. By the way, the stronger the overshoot, the better, the quicker typically you recover. And we saw that in August. We recovered just short of 2 weeks. I guess it was like 1 week and like 2 days or so. But in September, where it was kind of a weak overshoot, we pushed the limit. We got it on the 2 week mark. I was projecting actually like 2.5 weeks, maybe, just because of that Monday effect. But 2 weeks still works. So here in February, it was only a 4-point overshoot.
Wiz, I don't think the right chart is showing for you. We still see just the general spot vol correlation chart. I don't see your February here.
Interesting. Is there? So this line chart is not showing?
Yeah, I just see the blue one, not the February or the other ones, just the first slide.
Interesting.
There we
How
go.
about now?
All right. Now we're on the right slide.
I'm not gonna hit the
You might just need to re-summarize that for a hot minute if you don't mind.
Yeah.
For the group.
Sorry. You hit run slideshow, and I guess StreamYard couldn't handle it. I apologize. So anyway,
it's all good.
This area right here, this is what I was talking about in January 2021, a VIX overshoot of about 10 points. We recovered right here. About a week of very strong gains in SPX to recover, to kind of do that V recovery. And then we did it again in February of 2021. So look, this is actually not uncommon that we have like 1 month, 2 month, 3 month of these VIX overshoots. But this one was a lot weaker, kind of like September was a little bit weaker than August. And we had one big 2.5% recovery day. So we had recovered within a week of this one, I guess like a week or week and a half or so. So yeah, I mean, and then we had even like a smaller overvixing here. Typically these big overvixing spikes are followed by undervixing, like the kind of comes back to normal, right? On these strong things. You can't do really like a trend analysis. Like if we overvix by 0.2 for 10 straight days, that doesn't mean anything. I mean, yes, it could be building up some event vol or something for a future event, or an FOMC meeting or something. People could be buying puts and preparing, but it doesn't really hold to the study, right? And then we'll do a really quick look at the COVID drop, right? We started seeing some some crazy action here in the March like 10th, 11th, 12th time frame. This is, I guess, when did the COVID drop start? I guess it was March 10th, right?
Yeah. Yep.
Yeah. You see right here was like the big drop. We didn't really overvix a ton. Like we overvixed for a couple days straight here to March 12th, right? So this is like when I would say this would be a good time to see recovery, right? We did see a recovery in a 10% regain.
Insane.
Then we overvixed again in just like a week later. That was March 16th, 17th. We overvixed again. Then the Fed stepped in, right? They had a ton of bond liquidity, and we got strong undervixing and still kind of negative days here in the 21 to 22 section, right? But again, overvixing, but full recoveries, because I mean the market didn't really go negative after that, right? The overvixing here happened concurrent with a market rally, so there wasn't really a signal here, but these signals were satisfied. I mean, that's part of the deal. I mean, I guess you had from March 10th, you had until March 24th, and you had a full recovery by then. So I guess it's March 12th. So I guess March 26th, and you had a full recovery by then. So it was very interesting, the whole COVID thing. But on every occasion, the VIX price recovered, at least to the prior day's close, even if it was just a spike and then we followed up with another big down spike. It would recover like in 1 day, 2 days, and then would be followed up by another down spike. So this was the study. Again, I will just summarize for everybody who got confused with the whole PowerPoint thing. This is the spot vol correlation. Overvixing are like these dots right here, where VIX goes up a lot more points than SPX, or I guess it would be overvixing would be these dots right here. VIX goes up a lot more than SPX implies. Okay, it should, based on this correlation. So that's overvixing. When you overvix by 2 or more points within 2 weeks, give or take, maybe give it a day or two if there's some question, if it's a week overvixing, or if it's like exactly 2 points, give it an extra day. But if you overvix by 2 points, particularly on a downside, okay, you can expect a recovery to the prior day's close before 2 weeks, and 2 weeks change. Okay,
makes sense.
Let's describe why this is. Volland shows why this is. So I guess we could share dark matter screen now.
Yeah, where do you want me to hop on in? Teach away, master.
All right, so we're seeing dark matter screen right now. You can check out now. Spot vol correlation is going to be a little bit off now. I mean, we give past 6 months of spot vol correlation, so it seems like it's not quite as correlated here. But it's still about the same slope, and which you could see right up there, right up there in the top dark matter underneath where it says SPX.
Yep. Sorry.
Right there. That slope is how many VIX points you could expect for a 1% change in SPX. So right there, it is negative, what is that, 72, 73?
73. Yep.
73. So basically, if SPX were to go up 1%, you could expect VIX to be negative 0.73. Okay? That's the exact trend line. If you want to see overvixing, let's say the market goes down negative 1%, Jay, how much should we see VIX to activate the overvixing signal?
That's 7.3 right there, right? For every percentage point.
Yep. So it's 0.73. If SPX goes down 1%, how much would it take at close to activate the overvixing signal?
So
How much would VIX need to go up?
An increase of 0.73%, let's say.
2.73. We need 2
2.7.
points.
Sorry, yes, 2.73.
2.73. Okay.
Good call. Yep.
And
still Monday morning. I still haven't had my cup of Joe yet, or enough of it.
The VIX wakes up a little early on Monday too. So, a lot of times when it's like if it's a 0 today, like if SPX closes exactly flat, you might see like 0.5 increase, in VIX because of the Monday effect. So if it were to happen today, if we were to see a negative 1% today, you'd probably want to see negative 3.5 or something or positive 3.5 or something like that on VIX, as opposed to the strict 2.75. So if Julian, if you're still watching, hopefully you can pop on and let me know if that helps. You could drill it in a little bit here, but
it was really quickly. I want to go in to use as another potential confirmation, if you will, right? I've got the August 4th Vanna here, a historical view when we did have that last overvixing, as you mentioned, right? And the one thing you kind of earlier mentioned, you want that V-shaped looking cumulative exposure here. And as we were overvixing, hitting some of these key levels during that sell-off in August, I think it was 51.50 or 25, somewhere in there, where we found some support basically here. But this is also should be helpful to kind of use the spot vol correlation compared to the cumulative exposure here, and now we're starting to see that V shape occur near that support.
Right. Well, I think when you see overvixing, there are really two reasons why. So overvixing means implied volatility is shooting up much faster than it should. But implied volatility is shooting. When you buy insurance, there are a couple of reasons why your premiums would go up. Number one is there is like a storm coming. Like there's something that has come here and people are left flat-footed. So the insurance salesman is beginning to field 10, 15 calls every half hour saying, oh, I need hurricane insurance. There's a hurricane coming right at my house. He's like, well, you're going to have to pay more for it now because the hurricane's right on your house, right? That Aflac duck is like, ha, 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 But if you... yeah. Aflac,
love your Aflac duck, man. I'll never forget that again. All right, that will never go out of my head.
But so that's one reason why you would overvix, and really September, that was the main reason. But the other reason why is because at that moment, the insurance company could be experiencing a lack of liquidity. So let's say everybody already owns hurricane insurance and there's a hurricane coming. Only one person is calling for hurricane insurance, right? Like only one person on my block doesn't have hurricane insurance and they're calling up for it, right? And the hurricane's coming. And the Aflac duck is losing its feathers because everybody has cheap insurance already and he's scared, So this would be like a liquidity crunch, like the insurance company is afraid of really poor liquidity on their own side. They might have to declare bankruptcy or whatever. So, this kind of happened in 2008, the global financial crisis. There was a lot of liquidity problems. Some people owned insurance, and it wasn't hedged properly. There was a lot of liquidity problems, right? So that's what those swaps were, those option swaps and stuff, those problems. Right. So,
I know we got a couple of minutes. Go ahead. I didn't know.
So that's the second reason why. In August, VIX shot up to 60, even though it wasn't really, there wasn't really a ton of that. Not a lot of that was put buying. A lot of that was liquidity problems, and it was because, there was a fear. There was somebody getting liquidated. There was a fear, especially with the carry trade kind of unwinding, Nikkei going down 20-something%. There was a fear of liquidity issues throughout the market, and it permeated to the option dealers. But in September, there was no liquidity explosion. It was just people buying a lot of puts. And in both occasions, liquidity does eventually recover, and puts provide support under market. And in both of those occasions, the market will go up, especially in a positive aggregate Vanna scenario. All right.
Agreed.
Hopefully, Julian, I hopefully answered this. So,
yeah. If not, you know where to bother us, Julian. We're not going anywhere. We promise. Wiz, if you don't mind, I'm going to quickly just to recap our week here coming up. Just a few people reached out to me, just how I'm looking at the week here. So as we discussed, let me just go into my 4-hour chart. We can get a few more candles in here. So my biggest area of support on the week, and we've tested it now overnight, was kind of this 57.40 to 57.55 levels. These are two negative Vannas on the weekly and Volland that I was looking at for potential support here. We actually got to 57.55 overnight, pushed up to 57.80. We had this immediate sell-off. There was some European services, PMI, and manufacturing overnight. I don't think they agreed with what the outcomes of that was, and we saw that sell-off. But guess where we sold right off to? A very supportive level in the SPX. So for those following, the SPX to ES difference is about 60 points here. So this is roughly somewhere around 56.80-ish on the SPX. What I'm looking forward to here as the market opens up in about 25-ish minutes, 57.80 here, which is a big level we sold off from. It's about 56.20 on the SPX. Keep that early view, see what happens there. There is some positive Vanna up to that 58.10, which is our mysterious 57.50. And then we'll see what the fireworks occur after that if we get up there. But that's what I'm looking for early in the week, Jason, is do we reject this again and do we go further down? Or do we find it and go after our positive Vannas or magnets up to that 57.50? There, I want to be a viewer. I don't want to deal with the dealer gamma that's up there.
Yeah, I don't blame you. I think that's why, on Twitter and stuff, I've been saying 57.50 will be a strong resistance. I mean, that's when aggregate Vanna is going to tank hard. But I think, and on support side, 5,500 is the first place where you get even half decent Vanna support. So, some of that goes away too at the end of September, believe it or not. So,
okay. Be safe. Be careful. Yep. Have your Volland handy. Use it. It will save your life. No, I'm just kidding. It won't save your life, but it will save your trading life. How about that?
It'll save your life. Wow. All right. So that statement was not sponsored by Volland.
I'm not paid either to say that.
You're not. Somebody's walking across the street and car comes at them and they have Volland on their phone. You're going to still die. So
it's the Mr. Volland superhero, right? All right. It was an amazing episode again with you as always. Looking forward to this week's action. Any final remarks for your fans out there?
No, just may Volland help you in your future trading ventures. Sorry.
Thanks.